Are annuities a good investment? This is a question I get asked a lot from my financial coaching clients, so I figured it was time to do a whole video on it. I'm Penelope Jane Smith, and I run a 7-figure financial coaching and training company called Real Prosperity Inc., where we specialize in supporting women entrepreneurs to become financially free in 5 years or less. So in this video, I'll explain how annuities work and break down the pros, the cons, and the things to consider to see if an annuity is a good investment for you. So tap the like button and let's dive in. An annuity is basically an agreement with an insurance company where you make a payment or payments now, and they provide you with a steady stream of income later. So they're an insurance product where you're transferring the risk of outliving your savings to the insurance company. One of the benefits to annuities is that they grow tax deferred, which means that you don't have to pay any taxes until you take a distribution. So far, this sounds great, right? Guaranteed stream of income, tax deferred growth, gotta love that. Those are the pros. But those benefits come with a hefty price tag. Annuities come with a lot of fees, like a lot of fees. You've got commissions, insurance charges, investment management fees, surrender charges, and rider charges as just some examples of the seemingly endless fees that eat into your returns. So those are the cons. In most cases, I probably wouldn't recommend annuities because the returns aren't that great for what you pay. I wouldn't ever do a fixed annuity because the returns are so minimal that it's not even worth it. But there are some cases where I think a variable annuity is worth considering. First of all, there is no point in investing in an annuity inside of an account that already has tax benefits, like an IRA or 401k if you're in the United States. My favorite benefit of annuities is that you can defer taxes, which means that you can reinvest the capital gains and dividends and interest until you withdraw your money. Since tax-sheltered accounts like IRAs, 401ks, and HSAs already give you that tax benefit, you don't get any extra tax breaks by putting IRA or 401k money into an annuity. All you get is more fees. So if you've already maxed out all of your other possible tax-sheltered investment options, like you've maxed out your retirement accounts, health savings accounts, even real estate if that fits your lifestyle, and you really want another tax-sheltered investment, then a variable annuity might make sense at that point. But even then, with a solid investment strategy, you might still be better off investing extra money in a regular brokerage account, even if it means paying some taxes. So I think what this really comes down to is your investment strategy, which just means having a clear plan based on real data for protecting and growing your money. Ideally, one that aligns with your values and your behavioral style. If you don't have a clear investment strategy, then I see why you might find an annuity appealing. Because investing in the stock market, for example, it might feel scary, it might feel like gambling, and you want that sweet, sweet guaranteed minimum, right? But that siren song of a guaranteed return might be setting you up to hurt your financial future. Just like how the sirens in Greek mythology would lure sailors to crash and drown. Because if you're only making, say, 2% on your money, when you could be safely making 10%, that's stealing from your financial future without you even realizing it. Even small money leaks can make a huge difference over time. So let me show you what just a 2% money leak can do. Let's say you invest $200 a month each month for 40 years, and your money grows at 10% per year. So over that time, your money will grow to over $1,275,000. But if you should have been growing at 10%, but only earned 8% after that 2% money leak, you'd end up with a little less than $703,000. So that small 2% money leak would mean $572,000 less. And if you want to start living off your investments at that point, That 2% money leak means that your money will only be generating about $4,700 a month in passive income instead of about $10,600 a month, which is nearly $6,000 every single month less. And that is just a 2% money leak. When it comes to annuities, the money leaks tend to be much, much bigger than that. In the Odyssey, Odysseus puts wax in his crew's ears to keep them from hearing the sirens' song. And he tied himself to the mast so he could hear the song and still survive. So how can you apply that to your investing journey? The key is to protect your amygdala. What does that mean? Your amygdala is an almond-shaped set of neurons located deep in the brain's medial temporal lobe. It's part of the limbic system and plays a really important role in processing emotions, and it's linked to fear responses. So making investment decisions emotionally from your amygdala is a really bad idea, and it will sabotage your ability to keep and grow your money. These decisions might not even be conscious. I mentioned fear responses. Your amygdala will load up either the fear of losing money or the fear of missing out to convince you to abandon your strategy. Both of those things are gonna cause problems. So I encourage you to make it an ongoing practice to protect your amygdala. Protect your amygdala. How do you do that? Be aware of what information you're allowing into your space, whether it's certain news outlets or social media or people. Is it loading up your fear responses? Are you like, and you feel afraid of losing money or afraid of missing out on a great deal? Well, you might want to consider limiting your interaction with those sources of information. One way to do this is to avoid pick of the month stock newsletters, like the plague they are. This is a story-based $1 billion industry with the highest paid copywriters on the planet. They sell you stories about specific stocks, which hook your emotions and have your amygdala saying, oh my God, we have to buy this stock or we're gonna miss out on the deal of a lifetime. And then in the next issue, they sell you a different story about a different deal of a lifetime stock. And you end up with a gazillion ticker symbols and money just hemorrhaging out of your portfolio and destroying your financial future, even if you don't realize it. So between the story-based pick of the month newsletter industry and money channels, you're getting hit with dozens, hundreds, or thousands of ticker symbols and headlines every day. This is totally overwhelming. And what happens is your prefrontal cortex, that conscious part of your mind that makes the best decisions, shuts down, and then your amygdala just runs wild. So instead of investing based on fear of losing money or fear of missing out, I encourage you to follow a clear investment strategy. That way you know what's going on with your money. You always know what to do no matter what's happening in the news or politics or markets, and you're making decisions based on your strategy, not based on your amygdala getting triggered. We do a deep dive on investment strategies at my Financial Freedom 101 3-day online event. So if you want to understand investing better and be a good steward of your money, I highly, highly recommend you join us. If you're not already registered, go to financialfreedom101online.com to check it out. In just 3 days, you will get the essential financial education you never got in school or at home growing up. And you will leave with the tools and money systems you need to be financially free forever. Thank you for watching, and I'll see you there.